Hello everybody and welcome to the midweek market update from Smack the Markets for the 15th of January. So today we have the US and China signing that phase one trade deal. That's quite a momentous moment for that particular issue. It's been an issue that's impacted on market sentiment for quite a few months now. So it's quite nice to actually have that one concluded. Having said that, with one issue being concluded, another one sort of falls in to take its place. And we've got the escalation now of Mr. Trump's impeachment inquiry moving up to the Senate, which may well sort of cause a bigger focus on it, and it may well continue to have a bit of an impact on the markets. Now, so far, the impeachment inquiry hasn't really visibly been seen to have too much of an impact on sentiment. But again, now with the China deal out the way, that may well become sort of forefront focus. So let's take a look at a few markets here that we're keeping a close eye on in the trading room and how the markets have progressed since Monday. So if we take a look at the Dow Jones futures contract here and just sort of come back to sort of Monday area, what we were looking for here was for the market to be bullish and looking for new highs if the market sort of broke through the 28,870 level here. Now, what we can see happened was the market did manage to sort of push up. It actually managed to meet up to the 29,000 level, and this was yesterday, but then it pretty much didn't sort of hold up there. It quickly reversed back into this level. Now, at the time that this the market reversed was the announcement or the news announcement that the tariffs that have been imposed on China imports into the US were set to be held until sort of at least November. So that took a bit of a dampener here on the optimism of the Dow. Now, we can see that the market is still at this very sort of strong decision point area. And again, the analysis pretty much still exactly the same. So again, if we can get a bit of a push and bullish momentum coming up here off this level, after all, the trend is still intact on these higher time frames. So as the bias is still more here to the long side, we need to be looking for 29,000 and then beyond for this market to move on. If this indeed does actually sort of roll over, we've got a bit of a neckline through here on 28,700 or just above that 28,700 level. I think if we break underneath here, you can see that's been key support and resistance as well. Underneath that sort of level, pretty much sort of changes the trend on this market for on a number of time frames. We could see some much deeper retracements on the US equity markets. Now, if we come and take a look at the oil market on Monday, if we open up the 4-hour chart here, on Monday, what we were looking at here was this sort of level at, or these two levels at 58.65 and 57 sort of 60. So this sort of range here, we were looking if the market actually broke through this lower level, that we'd get a move down to sort of 57.60. That's in play now. You can see that the market almost tested that level. It's then sort of gone back up to find resistance at the support level and is continuing to sort of roll over. Doesn't seem to be a great deal of momentum behind oil at the moment, but the trend is still intact and it's still looking to sort of push weaker down to that 57 sort of 60 price point. Now, if we take a look at CAD yen, which was the currency market that we looked at on Monday, if you remember from Monday, our sort of opportunities that we were looking at here was long above the 83 sort of 900 level, just below this 84,000 level. We can see that the market did push on to make new highs. That was we didn't manage to capture the CAD yen, but we did manage to capture some yen markets in the trading room. We see that the market started to have a bit of a retracement now, as indeed a lot of the yens are, as the sort of the strength in the yen, or the weakness in the yen, I should say, has sort of changed at the today. Now, this just sort of sets this up for a retracement, and you can see if we come to the daily time frame, a retracement back into this sort of level where there's been previous resistance, back into those moving averages, is quite a nice potential sort of area where the market may well find support, particularly in the context of this daily trend. So again, we're looking for turning points or retracements back into these price points, and looking for evidence of support for potential new opportunities to the long side. Now, as far as new currency markets going into the sort of tail end of the week, one here that we like is the Aussie Swiss. In fact, all of the Swisses have been some of the key markets this week so far. If we take a look at Aussie Swiss here, you can see that the market has broken underneath a significant sort of price point where we've had strong support and resistance here for quite some time, in fact, going back into last year. Now, we're in the context of a short trend, of course. The market's sort of broken underneath there. There doesn't look to be an awful lot in the way, for maybe at least a move down to the sort of previous low here, and then maybe even sort of down much sort of further. So there's quite a lot of sort of free space underneath price, and if we come down to the sort of lower time frames, you can see these sort of levels a little bit more sort of a little bit more clearly. Again, we're looking for short opportunities here on this market, but at this moment in time, possibly looking at retracements, maybe even if we can get a retracement back into this sort of level, which is around the sort of 66.60 area, that would be sort of particularly nice. So things a little bit extended at the moment, but continued move to the short side on Aussie Swiss is one of the Swissy markets that we're focusing on in the trading room. So I certainly hope it helps, and look forward to speaking to you next time. Bye for now.